All right, let's kickstart the show then by putting the spotlight on Tiger Global funded company Bizongo that is nearing its unicorn status. They've recently raised about $50 million in a Series E round. We've got Sachin Agrawal. He's a co-founder of the company now joining in to discuss the outlook and lots more. Good to have you on board, Sachin. To begin with, just walk us through the investors that have participated in this round.
Yeah, surely. Round was essentially led by Schroders Capital, and it saw participation from our investors such as IFC, Girati Ventures, BII, which is erstwhile CDC, and B Capital.
Sure. So $50 million, what's the game plan? How exactly will you be utilizing the latest funds?
There are 2-3 areas where we sort of plan to use these funds. One is, of course, we see tremendous opportunity in building digital solutions for SMEs in the space that we operate, and we'll continue to invest in, enhancing our digital solutions, be it our embedded supply chain financing platform or embedded commerce platform, where we are helping them buy raw material at scale. So I think that's where the maximum investment will go. The second piece would be, of course, the broadening our market access in terms of reaching out to more and more enterprises, digitizing their vendors, and by the virtue of that, getting more SMEs on our supply side platform as well. And the third one would be where we would continue to look for some interesting inorganic opportunities as well, where any company which has built fantastic services or platform for SMEs, we would like to sort of make them part of a Bizongo ecosystem.
So now, given that there is a significant opportunity for the B2B e-commerce sphere, especially due to the highly fragmented nature of retail and manufacturing, how is it that you plan to differentiate yourself in this very competitive landscape?
Yeah. No, thanks for mentioning about the Harvard case study. I think I'm proud of the fact that we were the first and the only B2B commerce company from India which was featured into the Harvard case study. My co-founders Aniket and Ankit were there at Harvard just a couple of weeks back, and I had goosebumps seeing them there interacting with their students. But it highlighted the emerging competition in the B2B space pretty well. And we strongly believe that for any market which is as large as $500 billion to almost $1 trillion in size, there will be competition, and it is always good to have competition because it actually pushes you to innovate, differentiate, and build a very strong value prop for your customers, so that you give yourself an opportunity to be the best out of the lot. So I think we are very clear at Bizongo. We differentiate ourselves in two ways. One is our incessant focus on technology, making technology as the core growth driver for our business and key. The only way we can deliver value to customers and suppliers at scale. So that's one. And second, I think we believe in more of an ecosystem play, where by using the digital platforms that we are building, we want to bring the entire ecosystem of customers, suppliers, banks, NBFCs, logistics partners, all of them together on the ecosystem, so that we can leverage their strength and digitize the entire supply chain operations end to end through that ecosystem. So being true to our core strength, which is building digital platform and then bringing the entire ecosystem on that one unified platform to deliver value at scale, this is how we are going about it.
Got it. So walk us through your financials. Are you operationally profitable, and what are some of the key metrics that one can look at?
So I think the key metric that we are looking at as an organization is PBT profitability. The good part is that we have been obsessed about profitability from day zero, and we were unit economics positive from day zero. We have been EBITDA positive for last 2 years in a row. We were cash flow positive last entire fiscal year, and this year our target is to hit PBT profitability, which I'm sure we will get there. And from there on, the focus would be on sort of growing the PBT in a very sustainable way. And yeah, those are the key metrics that we are going to chase as an organization.
Sachin, you're almost a unicorn. You've achieved that coveted status, almost achieving that coveted status rather. So what are plans for the next fundraise rounds then?
So right now, I think the way we are looking at the future of the business. I mean, as we turn PBT profitable by end of this year, a business wouldn't need any sort of primary capital to grow and become a force in the Indian B2B ecosystem, B2B e-commerce ecosystem. So I don't think we will need business will need any primary capital from here on to grow. But of course, we will continue to see a lot of secondary sort of opportunities to continue to refresh our cap table and the investors that we work with. And as we grow our PBT from current levels to high double digits, I think we will evaluate any potential primary capital raise post that.
And finally, what's the long-term game plan? Where is it that you plan to take the company over the next few years? What are the growth and expansion plans lined up?
Yeah, so see, I think as I said, I mean, B2B e-commerce in India, based on various reports that you will see, happens to be anywhere between $500 billion to $1 trillion opportunity. And at our current scale, I mean, I would say we have not even scratched the surface. So the potential is immense, and I think we believe that we have a very strong product market fit across the two key offerings that we have for businesses out there. One is embedded supply chain financing as a product, and the second one is the embedded commerce platform, where we enable SMEs buy raw material at a very attractive price through our platform. So I think for foreseeable future, we'll continue to do more of what we have done well, and expand our penetration of both of these key offerings to a larger universe of customers and suppliers, and continue to grow the business in the most profitable fashion. So yeah, I think keeping it simple and just doing more and more of what we have done well, and continue to penetrate by delivering value to our customers and suppliers is what we are geared up for.
All right, good